A seismic shift has just occurred in the world of digital finance. On July 17, 2025, the United States House of Representatives made history by passing 3 groundbreaking bills that are set to redefine the landscape of cryptocurrencies and digital assets in America. These legislative victories were not only significant because of their content, but also because of the overwhelming bipartisan support they garnered, a clear sign that crypto is fast becoming an issue that transcends party lines. At the heart of this legislative wave is the Digital Asset Market Clarity Act of 2025, often simply referred to as the Clarity Act. This bill directly addresses one of the most persistent challenges in the crypto industry: the lack of regulatory clarity. For years, developers, investors, and institutions have operated in a fog of uncertainty, unsure whether digital assets they create, invest in, or list might suddenly be deemed securities or commodities by regulators. This ambiguity has stifled innovation, discouraged investment, and led to high-profile enforcement actions and court battles. The Clarity Act changes all of that. With a decisive 294 to 134 vote, including 78 Democrats crossing the aisle to join Republicans, the House has sent a powerful signal that the United States is ready to embrace clear, practical regulation for digital assets. The bill lays out, for the first time, concrete definitions for when a digital asset is considered a security and when it qualifies as a commodity. This distinction is crucial, as it determines which federal agency will oversee the asset and what compliance measures are required. Under the Clarity Act, the Commodity Futures Trading Commission, or CFTC, is designated as the primary regulator for digital commodities. The Securities and Exchange Commission, meanwhile, retains authority over digital assets that qualify as securities. This division of oversight is designed to bring order to the regulatory patchwork that has hampered the industry's growth. By clarifying the rules of the road, the Act aims to provide both protection for consumers and certainty for innovators, a balance that industry leaders have long called for. But the regulatory momentum didn't stop there. Hot on the heels of the Clarity Act, the House also passed the Guiding and Establishing National Innovation for U.S. Stablecoins Act, better known as the Genius Act. This legislation, which passed with an even stronger 308-22 vote, establishes a robust framework for the issuance and oversight of stablecoins, digital assets that peg their value to fiat currencies such as the U.S. dollar. For the first time, stablecoin issuers will be required to maintain reserves equivalent to the value of coins in circulation. This measure is designed to safeguard consumers and ensure the financial stability of these digital assets, which have become an increasingly important part of the crypto ecosystem. The Genius Act also sets out licensing requirements and risk management protocols, bringing stablecoins closer in line with traditional financial instruments. Major U.S. banks, including J.P. Morgan, Citi, and Bank of America, have hailed the Genius Act as a milestone that brings much-needed clarity and opportunity to the digital asset space. Their support underscores the growing acceptance of cryptocurrencies within the mainstream financial system and highlights the potential for deeper institutional participation. As if these 2 bills weren't enough to mark a new era, the House also narrowly passed the Anti-CBDC Surveillance State Act with a 219-210 vote. This measure prohibits the Federal Reserve from issuing a central bank digital currency, or CBDC, reflecting deep-seated concerns over privacy and the potential for government overreach. The debate over digital dollars has been heated, with critics warning of the risk of surveillance and the erosion of financial autonomy. The passage of this bill highlights the ongoing tension between technological innovation and fundamental civil liberties. These legislative victories follow months of intense debate, lobbying, and public discussion. The crypto industry, recognizing the stakes, invested heavily in the 2024 elections and has worked tirelessly to educate lawmakers on the importance of clear, fair regulation. The outcome is a testament to the industry's growing influence and to Congress's recognition that digital assets are no longer a fringe phenomenon but a core part of the global financial system. The next chapter in this story will unfold in the Senate, where the Clarity Act and its companion legislation face further debate and the possibility of amendments. While the outcome remains uncertain, the House's strong bipartisan votes offer hope that the bills will ultimately make it to the president's desk. Inside sources suggest that President Donald Trump could sign the Genius Act into law as early as tomorrow afternoon, further accelerating the timeline for regulatory change. The market's response has been swift and enthusiastic. Bitcoin, the world's largest cryptocurrency, is trading at over $118,000, with intraday highs surpassing $120,000. Ethereum, too, has seen renewed momentum, trading above $3,500. The bullish sentiment reflects a new wave of institutional confidence, as investors anticipate a future in which digital assets are governed by clear, consistent rules. For builders, investors, and everyday users, this is more than just a legislative milestone. It's a turning point. Clear regulations mean reduced legal risk, easier access to banking services, and the ability to innovate without fear of retroactive enforcement. It also paves the way for greater institutional involvement, from banks to hedge funds to payment processors, all of whom have been waiting on the sidelines for regulatory certainty. But the implications go even deeper. With the United States poised to provide a model for responsible digital asset regulation, other countries may soon follow suit, ushering in a new era of global cooperation and innovation. The era of regulatory uncertainty is drawing to a close, replaced by a framework that encourages both safety and growth. In summary, the passage of these bills marks the most significant legislative move for digital assets in years. Whether you're holding Bitcoin, exploring DeFi, or building the next generation of blockchain applications, these changes will touch every corner of the ecosystem. The message from Congress is clear. The United States is ready to embrace the future of finance, and it's doing so with clarity, confidence, and bipartisan resolve.